As you know, Andrew, we now have Sovereign Wealth Fund or SWF to attract investment to the country. But how effective do you think the Sovereign Wealth Fund in reducing debt of Indonesia in the future?
Sure. So the Sovereign Wealth Fund, I think, is an interesting development. And, from our point of view, we see it as a vehicle which will be helpful in financing investment into infrastructure, physical infrastructure in Indonesia, which has been a significant priority of the government over the past 6 years or so. There has been a lot of progress made, but there also has been debt raised, of course, in order to finance these investments so far. And a lot of that debt has been raised by the government-related entities in Indonesia. So this appears to be somewhat of a solution to that issue where perhaps the government-related entities will not have to raise quite as much debt in the future in order to help to finance the build-out of the infrastructure in the country. And the government itself will also not need to pay perhaps quite as much as it otherwise would through its budget to develop the infrastructure. Now, the question with INA in particular is going to be how much funding can they raise and how successful will they be in terms of being able to invest this into those infrastructure projects. And that's going to take time. I think that's going to be a medium to long-term story. Something else that we would be looking at over time is going to be the governance of this fund because it does have significant ambitions, to ramp up to at some point perhaps $100 billion or even $200 billion. So governance of those liabilities and the associated investments will be important to us over time too.
Okay. Andrew, we've also seen how the investment to Indonesia grew for about 4% in the first quarter of 2021. So how effective do you think Indonesia in the eyes of global investors worldwide?
Sure. So I think, there are probably a few different parts to this, but, one very important part to us, again, was the introduction of the job creation law or the omnibus law in late 2020. This is going to make it easier to hire people, especially in the manufacturing sector, the labor-intensive industries in the country. And we think it's going to make the business environment in Indonesia better for foreign direct investors who would like to come into the country and start operations there or upsize their operations. So over time, it could be an important shift in that you're bringing in more FDI to fund the current account deficit, and the country may rely less then on hot money or portfolio inflows over that same period of time. Now, with regard to those portfolio inflows, what we've seen over the past year or so was especially in March and April of 2020, foreign investors into Indonesian government securities headed for the exits, right? There was a lot of volatility in financial markets, and folks probably headed toward safe haven assets for that period of time. But after April 2020, we started to see these investors come back into the market gradually, slowly but surely. And in terms of the total value of the government securities owned by foreign investors now, it's roughly back to where it was a year ago. So this certainly signifies some degree of confidence on behalf of the foreign investors. We have also, though, seen them fall as a share of the total market. And this is because Bank Indonesia and the domestic commercial banks are purchasing quite a lot of local currency debt from the government over the same period of time. So foreign investors are essentially a smaller part of the market today than they were a year ago.